Today we're going to talk about the hidden costs of buying and selling a home. Now, you might have heard stories of people buying a house for about $500,000, $500K, and selling it a few months later for $750,000. It sounds like they've made a ton of money, right? But in reality, they're probably not making as much as you think because of all the hidden costs involved. Now, a $500,000 house will not often be turned around and sold for $750,000, but we all have seen plenty of homes that have been flipped. They've likely been purchased at pennies on the dollar in really bad shape. And obviously, depending on the investor, some are of good quality while others are not. But at the end of the day, their sole purpose is to turn a profit. But that profit may not actually be as much as it seems. And just being fully transparent, it's probably one of the reasons I don't flip homes. But anyways, guys, my name is Casey McEwen, and I'm a licensed real estate agent in the Dallas-Fort Worth area. But before we jump into today's video, if you guys are finding all of my content on this channel valuable, make sure to hit that like button, subscribe to my channel, and stay tuned for more future content. Now, as a real estate investor who's owned many homes and technically flipped, but kind of turned them into rentals myself, I'm going to be sharing you guys the hidden costs you might not actually know about. Now, not considering these expenses can turn what seems like a juicy deal into a money-losing venture. So be sure to watch this video all the way to the end. Now, first, let's talk about closing costs when you buy a home. Now, many people think they only need about 20% of the overall home's price for a down payment, but they couldn't be more wrong. You also need to make sure that you're covering closing costs. Now, yes, you can certainly have a portion, if not all of them, covered by the seller. That's not something you should expect. So here are some you may encounter. First and foremost, title fees. Now, a title company handles the paperwork to officially transfer full ownership to you. Now, most states will require you to use a title company or an attorney specifically. And also, a lot of these costs are going to be negotiable within a contract. So certainly there are going to be times where you'll have more favorable contracts where, let's say, maybe a seller is going to pay a title policy. And then on the other side of the spectrum, some deals may be a little bit tighter of a pinch where, hey, you may be paying this title policy, and depending on the overall price of the home, paying title policy could easily swing a deal between good and bad. Now, in addition to just paying title, you also have escrow fees. Now, the escrow company holds your money during the transaction and transfers it to the seller once everything is complete. They get obviously paid for the service, like everyone has to pay escrow fees. Now, if you're getting a loan, the lender will require an appraisal to ensure you're not overpaying. This cost can range anywhere from $600 to $800, maybe a little bit less depending on the state. And I'll tell you, even on my cabin in Broken Bow, it cost me far more than $800, and I didn't just get one appraisal. I got 3 or 4 different appraisals when I was attempting to do a cash out refinance. So ballpark $600 to $800, but it very well could cost a little bit more or far more than $800. Also, as a buyer, most lenders are going to charge processing fees or include them somewhere in the mortgage rate itself. They may also charge discount points if you want a lower rate. Now, this is obviously if you're going the traditional route and just getting a regular mortgage, putting 20% down and maybe turning around and selling it in the near future. But if you're wanting funds and just outright cash to hopefully get that property at an even lower price, you're likely going to rely on some type of private money or likely a hard money lender. Now, a hard money lender is going to be substantially more expensive than just a traditional mortgage, and there's going to be even more fees associated with that than just a traditional conventional loan. Now, it's wise to get an inspection before buying. Now, this can't always be the case if you're buying an incredibly rough property and you offer them an incredibly low price. In those situations, you're essentially going to accept the property as is. You're not going to get an inspection, and just know that you're getting the property at a low enough price to basically factor in what is likely going to come up on an inspection or what is likely already kind of baked into your expected rehab costs. Now, if you do by chance get the opportunity to inspect, this can range anywhere from a couple $100, $300, $400 to upwards of $800 to $1,000 based on what all you're going to inspect on the property. Now, obviously, this is a very small expense if you're looking at the grand scheme of things. An inspection can save you or at least notify you that A, B, C, and D all are issues with the house, and some of these issues you may not even be aware of. So it certainly is an expense up front, but it's going to save you a lot of money down the road and even potentially save you from investing in a property if it's not in a condition that makes sense to purchase. And even more fees that you may not even consider yourself are city fees, which essentially are recording fees, state fees, stamp fees, and they're all collected by the title company. Now, these certainly will pale in comparison to, let's say, actually paying for title or potentially closing costs on your loan, but at the end of the day, these are fees that are often not talked about and fees that you ultimately are going to have to pay regardless. There's nothing you can do to negotiate. Now, all of these closing costs, except for the appraisal and inspection fees, usually add anywhere from 1 to 2% on the total purchase price. So instead of saving just that 20% that you have expected, you should save at least 22% to cover these costs, plus have plenty for your reserves. But next, let's talk about owning a home. You'll need to have insurance to cover damages like fire or accidents. Now, insurance costs will vary tremendously based on the property and the overall property's value. It's really going to be based also on the home size and location. Unfortunately, where I am located in the Dallas-Fort Worth area, insurance is incredibly high, and that's because we get a ton of hailstorms, and with hailstorms come plenty of insurance claims that wind up actually having tons of roofs being replaced here in Texas. Now, obviously, there is an intention for insurance. Having a $20,000 roof replaced via insurance versus paying out of pocket is a tremendous asset, but it also has to come from somewhere. So the actual annual premium that we are paying as far as residents here in Texas is going to be much higher than in other states just because of the amount of claims that wind up going through insurance. Now, property taxes vary by state. In Texas, it's anywhere from about 2 to 3%, while in California, it's around 1 to 1.5%, and taxes can increase significantly if your property values rise. I'll give you one example in particular. I bought an investment property back in 2017. It wasn't owner occupied, and the area really was, I guess, changing in the near future. It obviously was not changing yet, but I bought it and it was assessed or essentially taxed at about $170,000. Well, within the next 2 years, it had jumped from $170,000 to now being assessed at $300,000. So that means my taxes in almost 2 years doubled. Now, the numbers that I ran initially with the property are obviously going to be much different if your taxes double. Now, that obviously was bad news for that particular property, but the good news was this area actually started to kind of change, and I was able to get a little bit more rent over the next couple of years, and it wound up kind of washing out at the end. But this is something that you obviously need to pay attention to, is property taxes. You'll also be paying for utilities like electricity, water, potentially sewer, gas. If you own a rental property, tenants usually cover these, but landlords often pay for water and sewer in multifamily properties. Now, one way you can get around this is obviously having owned a fourplex myself. Everything was on one particular water meter. Now, what the landlord used who I actually purchased the fourplex from, they just covered the entire cost itself. But when you have 4 separate units using as much water as they essentially want because they don't have a water bill, it's a couple $100 a month. And that obviously is going to add up over time. Instead, what I wound up doing is actually cutting it into 4s and distributing those 4 costs over to my tenants rather than to me. Now, getting back to costs, maintenance is also going to be another factor in costs at the end of the day. You'll obviously handle minor repairs and major expenses like HVAC replacements, or as I mentioned earlier, roof repairs. Now, certain maintenance costs can definitely be covered by insurance, but you still have a deductible to pay, even if you do have them covered by insurance. Now, make sure you have reserves for all of these costs. Just as I mentioned earlier, make sure that you have more than just 20% down and more than 22% down when you accumulate all of these likely costs associated with purchasing. Now, I've obviously discussed plenty of different costs already through this video. I'm not even done yet, but as you can see, there are certain costs, regardless if you are just purchasing a home, selling a home, or you're an investor yourself, that you can kind of find sweet ways around them to hopefully save yourself a little money here or there. And last but not least, finally, there is your mortgage. Now, every month you pay a part of your debt, which is your principal, and interest, which is the bank's profit. Now, high interest rates mean you pay much more over time. Now, as of right now, there is expected to have a rate cut in September of 2024. We're a few months away from that. Who knows if it's actually going to happen? We're all hoping it happens, continued with a few more rate cuts leading into 2025. But if you're looking to purchase right now, you're more than likely looking at rates somewhere between 6 and 8%, which is substantially higher than a lot of folks who would purchase over the last couple of years, especially in 2020 to 2022. And their rates are sitting anywhere from 3 to 4, maybe 5% at the top end. So certainly more is being paid as of right now in interest than in the past few years. Now, moving over to selling. When you sell, you'll face more fees as well. Now, realtor fees are usually going to be the biggest, and they typically range anywhere from 3 to 6% of the final sales price. This gets split between the buyers and sellers agents. Now, there are also closing costs associated with title and escrow, and even potentially prepayment penalties. Now, I will mention in this particular video, there is a lot to be said in terms of changing with realtor commissions coming really this month and next month, meaning July and August of 2024. It's not going to really change much for me and my business. I'm obviously a realtor in the Dallas-Fort Worth area. When I meet with sellers, commissions have always been negotiable. At the end of the day, sellers want to sell their homes, and I'm going to suggest and recommend that they do something. At the end of the day, it's still their choice and their decision as far as what they opt to do. So regardless if they just want to pay me and not offer a buyer's agent's commission, they've always had the opportunity to do that, and they very much will have the opportunity starting this month and next month in regards to not compensating buyer's agents, but also not to be a negative Nancy. They're going to have to figure out how a buyer's agent will get paid. And if the buyer can't afford to pay the buyer's agent, well, then their house is ultimately not going to sell. Now, these hidden costs can add up. So if you see someone sell a home for much more than they bought it for, they likely made less profit than you actually think. Real estate isn't a bad investment, but you need to be aware of these costs and plan to hold on to your property for at least 5 to 7 years to kind of spread out the fixed cost and allow the property to appreciate and for you to pay down the principal to ultimately walk away with money in the end. Now, if you've only been in real estate for the last couple years, you may have been fortunate enough to buy a home in 2020, maybe sell it in 22 or 23 and walk away with a pretty nice profit, but that is not going to be a traditional real estate market. I tell most folks, if you're looking to purchase now, there is going to be a slight amount of appreciation on an annual basis. There's also going to be a little bit of principal paid down, but if you're wanting to buy a property and then turn around and sell it without really trying to flip it, you're not going to wind up profitable unless you likely held the property for anywhere between 3 and 5 years. And that's just breaking even. That's not talking any potential profit. Now, real estate is my favorite investment. It always has been and likely always will be, but it's not an investment that you make with the hopes of becoming rich quick, like purchasing a house today and selling it for a 50% gain in a couple months. Now, sure, you can flip a property, make a little bit of profit, pay a substantial amount of taxes on it, and try to roll it into another investment. But for me, real estate's all about the long game. I'm still only in my mid-30s. I have a really great real estate portfolio, and it's going to do dividends for me over the next couple decades. But that basically covers all of the costs associated with either buying, selling, or investing in real estate that oftentimes are discussed. If there are other questions that you may have about hidden costs in regards to real estate, leave a comment in the comment section down below. Reach out to me on social media. I would love to speak with you directly. Or if you don't have any questions, make sure to hit that like button, subscribe to my channel, and stay tuned for more future content.